All right, Evan, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, don't forget to give the video a thumbs up, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So, trillions of dollars wiped away here in 2 days. You can see we gapped down last Monday. We talked about the weakness in the market last Friday. And you can see, I think we talked about the scenario where the best case for bulls was a gap down and a recovery. And that's what happened. However, Tariff Day, Liberation Day, not go so well here. It appears the market, from what I can see, if I had to put a stamp on it, it seems the market is really kind of called Trump's bluff on this tariff thing, and they have not taken it seriously. And I think that's why we have gotten the dramatic nature of the sell. Yes, a lot of this was money going home from Europe and so on, and there's a lot of things that kind of culminated together to bring this out, but it appears that the market just was not fully taking this seriously, the severity of it. You also have things like the yen carry getting to interesting levels here, breaking the 148 area. So just a lot of negative things happening all at once, and market is now throwing the baby out with the bathwater. And in just two sessions, we've seen a 10% drop. In fact, for the week, we're down about 9% here. You can take a look here. Indices down 9, almost 10, and then 10 on the NASDAQ and Russell. Gold miners 8.5, futures down 2.5, silver down 16%, energy down 10% or more, pretty much across the board here. And there's some reports now about hedge funds possibly looking at large margin calls. Kyle Bass did refute that. I do trust Kyle Bass. He runs one of the largest hedge funds in the world. That said, there probably will be some margin call Monday. In fact, you don't chop 10% in 2 days without some of that happening. And Lehman style is probably too much. So I agree that it's not going to be anywhere near that big. But that said, what can you say? This is historic, and it came about in just 2 sessions. I mean, we were at 5,700, and you can even see if we look at the futures, the initial reaction to the tariffs was quite positive. In fact, we had a pretty good rally that day, and then we had a pop on it. And as soon as Trump brought out his second graph, that's when the market really dropped. So we had that big run all the way almost back to 5,800, and then a huge drop on the ES into the close here. We're watching this trend line now, but just be advised, if we do have margin calls, which we're going to, I'm sure, with Asia, if we gap down, etc., it doesn't look like Trump is backing off. I do think he wants to see this through. But just be advised, technicals will work, but a lot of the time they will overshoot dramatically in these environments. Right? When you have forced selling, when you have panic, right? We have volatility. If we take a look at the VIX, at a 45, you're going to see overshoot. So I'll do my best to give you these levels, but these are not something that you jump out in front of. And in these environments, you look for, quality, VIX 45, you look for quality names that you can accumulate. But, going all in here or just relying on these chart levels is not a good idea. But in any case, we are watching this trend line here on the SPX. That could bring us down. I mean, who knows what can happen Monday, but the 2021 all-time high is not that far off. It's only about 250 points away. And it does seem to coincide a little bit of overshoot with this trend line here going all the way back to the pandemic low. If I can get this in there, right, there we go. So you can see the pandemic low, we're right into that. There's also a shorter term one, although it's really not short term, from the 2022 low. If we just connect this, you can see these kind of intersect here. So right around that whole round number 5,000, I think a good slice of that would probably see a very, very steep rebound. I do think, and this is overshot my expectations for how far this would go down, but I do think this will be over in at least a week or two, and we'll start looking at some sort of a rebound from there. But this is a historic move. I haven't seen volatility like this since the pandemic. And before then, I think the only thing that comes close is like Volmageddon in 2018, and then probably the flash crash, which I traded through as well. So yeah, I mean, last August that was just like a preview. That was kind of like a 1 or 2 day wonder here. This is, I mean, we can see this is, on the S&P here. That's 5120. That's 150 points in 30 minutes. That is wild movement here on an intraday basis. So we are seeing disorderly selling now, and these are the most dramatic moves, and they usually spark panic, and they can cause a lot of emotion here. But that is usually the hardest time to buy, but usually the best time, at least from a longer term perspective. But we are watching that trend line here, the whole round number 5,000. Not much to say here on the bull side. Got to reclaim this August low for any sort of short-term bounce, and then really the big line in the sand is 5,500, and it seems like a long way away, but we were there 2 days ago, so that will be kind of a macro level for the market to reclaim, when this does find a bottom here. But anyways, triple Qs again, big slice, got way lower than I thought this would go on this leg. Again, you can see the 2021 high is right in place, right around 400. So I was thinking maybe like 435, 440 would be max on this move here, but markets crashed from oversold, not overbought. Incredible volume too, by the way. Look at the spiders here, over 200 million shares. That is, usually what you see near panic lows. So we are definitely getting to that level. We'll see how Sunday night opens. IWM down 4. Now here's an interesting thing. I noticed this on Friday. IWM only down 4.46%. QQQ down 6. Spiders down 5.85. Dow down 5.43. Russell 2000 is small cap. It should be risk on. This is a risk on index, right? Their companies aren't as profitable. This was down less than everything else was on Friday. So maybe some of this is starting to slow down here. Maybe small caps, the pressure is starting to abate just a little bit. And if that continues Monday and we're down again and the Russell's down less than everything else, maybe telling us that we're getting close to a low here. Another thing I want to look at is the transports. Only down 3. I mean, it's a lot, but only down 3 1/3, down less than everything else. So watch the transports, watch the Russell. If they're outperforming on a relative basis again on Monday, even if we're down, that's something I'm going to look for to give us clues to see if there's a low coming shortly. Well, keep an eye on that. Semiconductors getting hammered. This is into a very good level here. We did break this trend line very steeply, but we also have a very good fib, 50% fib retrace right here, and then below that is the previous high, 2021, and then 2023. I do like the third Pierce. If this can put in a low here, you've got major resistance up around 205, which is essentially where it broke down from. But just incredible declines here across the board. Baby really being thrown out with the bathwater. You had that good weekly support on IGV, but again, whole market coming down, there's not much that can be done, and it is retracing all the way down to basically the 80 handle at this point. So filling out all that liquidity from last August. Interest rates here are down, as you can imagine, and that is structurally that's a good positive. You want to see bonds get a bid here as risk off, and we have seen yields come down, so that is a good thing. Although they're not down as much as I would think they would be. Usually, you get a very big TLT spike when you have a panic like this, and I mean it came pretty much off the highs last Friday. So it did. I mean, this is not really a convincing breakout here. To be, quite fair, but it is acting risk off, which is positive. It does suggest it's not systemic. One other thing I did notice is the 3-month 10-year went inverted again after fully uninverting. There's only one other time in history I've seen that happen. And again, this could be brief. We don't want to count on it too much here because it just happened. Sometimes these happen for like a day or two, then they go right back. But keep an eye on that, because the only other time that happened was in, I think, 2007, where it was steeply inverted for a long period of time, and then it uninverted and then came back. So right there, we'll see if that continue. If it continues, then it's something. But if it starts to break right back up, then it may be kind of doing the typical move there. But just found that interesting. Keep an eye on that. The 2-year is also getting a bid, 2-year note, and that does give the Fed breathing room. This is what Trump wants. He wants to push these yields down to get Powell to budge. And it's aggressive and it's risky, and we're going to find out how much damage it's going to do this week. XHB, this is interesting, up 1% on Friday. So this beat the market. Very interesting, right? I do like this level a lot too. I mean, this is, we haven't reached, this has not been back tested on XHB. So, there's things in these environments. I know it's scary, but you gotta look for quality names to accumulate. You gotta get your shopping list out. This is the time to do it. Doesn't feel like it is when it's happening, but they always end up the same way. Anyway, VNQ here, getting hammered, again, closing below the weekly support level, so this ended up being a lower high, lower low. I don't know if I have even a good level on this right now. I'm just going to say, you have some support here with this prior breakout, but I mean, if we're just knifing down on margin, I wouldn't trust that right now. But VNQ getting hit, XLF finally got hit as well. Down 7%, and right into a little pivot here. Much bigger one at 42.50 though. ARE, it did hold the 618. So pivot from 2023 to the high, and that held a lot of demand right here too. So I'm not surprised that did come off the lows, and that may have helped small caps. A lot of regional banks in there, so maybe that contributed to IWM's outperformance. KBE with a similar look. Broker dealers finally getting wiped out. We've been talking about this parabola for a long time. It was on borrowed time, and it is finally coming back in. I'm going to say 650 next level there on broker dealers if it's knifing down on Monday. Take a look at this oil chart here. Total panic. Now recession fears are back on the table. So again, we're at this fine line here on oil futures. We'll see what this does Monday. This is also still quite crowded here on the short side. But energy getting hit. Take a look at this XLE chart. This is something else. Look at how bullish. I mean, we talked about this last week. Look at that rebound. It was outperforming the market 2 days. Sheer and utter panic here. So, again, get your shopping list ready. Everybody wants the dip to buy until the dip actually comes. But in any case, XOP, look at that. Being close to the 100 handle. We haven't seen that in 3 years. OIH, haven't seen this since 2022. All these things breaking down here. CCJ holding the lows. It's actually held up relatively well. URNM, again, it got to bounce at that big weekly level, but not much. Got to hold on to this like 27, 28 area here. And the NJ at all-time lows. Granted, this is a newer issue, but these smaller companies are in a lot tougher shape. Nat gas did sell a little bit on Friday, but if it can hold this range here on the weekly, it's still kind of bullish. You still have a nice uptrend here. You still have inside bar. So nat gas, I think, can still consolidate and can go higher. For now, we'll see what it does. It didn't have a good day Friday, but if it starts breaking down below like 3.6, that may be off the table. But right now, the weekly pattern and structure is still pretty good. So gas hanging in there. DXY with a big rebound on Friday. I think some of this is risk off. Again, good to see the dollar and bonds get a bid in a day where the market panicked. Lately, that's been a concern. The market's been selling off with the dollar and with yields rising. That's bad, very bad. But we've seen as the panic came in, bonds did their job, the dollar did its job. So that is a positive. Gold finally down here. You might ask, why is it down with being a risk-off asset? Margin. It's a winner. So if you're getting margin called, you have maintenance requirements to meet. You're selling your winners to pay for your margin on your losers, right? That happens almost every time there's a situation like this. But gold did get to my target, just FYI. So I'm thinking it's getting ready to do some consolidation anyway. Silver looks like 38 is off the table. That might have been it for now. And I think it was Jordan Byrne, if I'm not mistaken, who had something to say about silver. Yeah, I think I agree with that statement. So silver, 35 to silver is what 2100 ounce was for gold. I think that's a fair statement. Once it gets through that, which it's going to be stiff, it's going to be it's going to be a lot of work to get through. Once it gets through that, that's going to be the real uncorking. But you can see here a lot of sellers coming in. That's the industrial component there. Platinum 52-week lows as well. Told you I haven't liked that in a while. Same thing with palladium here. So nothing to do with those. Look at this move in copper. Unbelievable. Picture perfect double top with a beautiful reversal. And that went way farther than I even thought it would. So amazing reversal there. And ironically, Bitcoin is completely unaffected. So it's down. I'm doing this video Sunday. It's down a little bit, but I mean, you'd never know anything is going on. In fact, everyone's favorite is actually holding up here too. It was actually green, up 24% on Friday. So go figure. Altcoins, Bitcoin acting like nothing is going on. This is very isolated to equity. Very strange. So again, from panic breeds opportunity. But again, if you're going to accumulate, again, keyword is accumulate, not all in. This can overshoot. We do like this level here, but we can easily overshoot if we're dumping down on margin on Monday. So it should be a historic week. I'm sure we'll see a lot of volatility on both sides. I'm starting to hear the other countries come to the negotiating table now. So once we get some certainty, the market may start to settle. But we need to wash out some of this leverage, and once that's done, the market can rebound. Just a question of how much does it need to do before that. So, anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. See you guys all next week.